This is our Forex blog for November 7th, 2011. And like most days, we really want to buy the absolute strongest currencies versus the weakest and sell the weakest versus the strongest. It's that simple. And there's certain patterns you can use on our currency meter to anticipate future price direction, which, is basically how you make money trading. If you are right about the direction and you're in the market in that direction and it goes that direction, you make money. If it goes opposite direction, you lose money. And you're going to have losing trades no matter what system or tool you use. But the key is small losses and bigger wins. And, of course, also having as high a winning percentage as possible, which you will find when you trade with this, it increases your winning percentage. So the dollar and the yen both show strength starting today off. The dollar has a daily trend and weekly trend that's, slightly more up than the yen. So if you have your choice of either of those currencies, you would choose the dollar over the yen just because the weekly trend is just barely up in the yen and it's quite strongly up in the dollar. The euro, while it was strong, a few weeks ago, is now on a slight downtrend. The Swiss is extremely weak on all time frames. The Australian is weak on the daily and the weekly. And the CAD is also weak on all time frames, but it's not weak today. It's showing strength today. So, you can certainly buy the CAD versus one of the weaker ones, but knowing that the CAD's longer term trend is down, it reduces your odds of having a big win. Currencies where the weekly monthly trend are down, and this isn't blood red like the Swiss, they might have strength for a half an hour to 3 hours, but then typically they have 1 to 3 hours of a counter trend move, which really never happened until about 6, and then you can see for 3 hours it did, for the most part, but the majority of that time it was weak. So you can't quite predict a strong currency when its longer time frame trend is down. You have to assume that you're only going to get a half an hour of strength, like right here, here, and here, followed by brief amounts of weakness or really no strength at all, sideways movement. So looking at this today, the Australian was a really high odds one to trade to the downside against the dollar, and also the Swiss. You can see that, starting the day off, we have a lot of strength and then some weakness, then a lot of strength followed by almost no weakness. This is the perfect pattern you're looking for. Also, this hour and a half of strength right here, followed by very little strength and even less weakness. That strength's likely to return. Now, it only does here for a half an hour, but if you find a currency that has the exact opposite pattern for the weak side, you can usually find a 20 to 30 pip win, and with a very, very high winning rate. So getting back to this, the Swiss, very weak here, and it has about 40 minutes of extreme strength. Then the strength falls off. And this is exactly what you want to do when you use our currency meter. You want to anticipate the next direction. Because the longer time frame trend, the daily, weekly, and monthly is so weak, and because the last move also was extremely weak, followed by a counter trend move, once that counter trend runs out of steam, coming up to 2, you're anticipating the weakness coming back, and it does in about 20 minutes. Now, the dollar at that time had some strength and followed by weakness. Before that, the pattern, in the yen had a lot of weakness followed by very little weakness. You could, because of the Sunday night's extreme strength in the yen, anticipate, some yen strength, which it did for a couple hours. But also the dollar's stronger weekly-wise than the yen. So let's look for buying the dollar Swiss at that time. And this isn't a textbook perfect, 80, 90% example. This one's probably a 60% odds trade. Looking at the chart, this currency is above the hourly. It broke Sunday above Friday day's maximum high. And basically that means that you're looking to buy this and you're focusing on buying it. You can see our Fibonacci areas that I do each night that show up on the chart. These are very high probability reversal areas, especially when it's way above the upper 2.0 band. So here's some of the trades you would have done today. Extreme strength followed by a little bit of a pullback, and you give it a shot here. A double top usually is a reversal. When it comes down, it doesn't come back underneath the previous day's low, or previous day's high. It's going to go higher. The first trade here, you can see barely generated more than about 6 pips of profit. I like to draw trend lines over pullbacks. You go long right here, and you can see this one shot up from 89.20 all the way up to my Fibonacci profit target level. And anytime it's above the upper band, first sign of it stalling and going sideways, you usually want to just exit the whole thing. You don't need to wait for it to pull all the way back and hit a trailing stop. So you might have been out of this somewhere around 80 or 75. But nonetheless, that's a 50 to 60 pip win. And when it's this far above the upper containment band, it's usually pretty risky to buy up here. But this pullback came right back down, right near the 2.0 containment band. And the fact that it was one of the dollar was so strong today and the Swiss was weak on all time frames, you might have wanted to give this another shot. And anytime it's above the upper containment band, the majority of the time you want to just draw your fibs on there and exit at the first fib target. So this next trade you might have been long here at 66, and you would have just got out of this trade here at 17. But another 50 pip win. And usually when it's this far above the upper containment band, you can do counter trend trades. The focus of our system is we trade with the trend until the market moves too far, and then we look for counter trend trades once the momentum dies out. So you can see it had momentum starting to die, momentum is starting to die even more. You certainly could have sold this double top right here. It's so far above the upper containment band by about 60 pips. And usually it's only a matter of time before markets reverse. And some traders, look to scale in. They might have got into maybe, let's say, a lot right here, 2 lots, 3 lots. And the fact that it failed to double top, you might have added another 3 lots. You have a big 10 lot position on here with your average entry somewhere, maybe down at 11. And then when it pulls back down and starts to go back up, you get out. It's about a 50 pip win. If you had 10 lots, you would have made $5,000 on that trade. And that's what a lot of our professional traders do when markets get up too much. Now, once the market reverses and comes back down, we basically trade with the trend until it moves too far. We wait for the momentum to die out, and then we look for counter trend trades. Usually currencies that are this strong and go above the upper containment band, they're going to find support, usually at a 50% pullback. Draw your fibs from the absolute bottom to the high. In this case, it was so strong it found support at the 38% level. It also found support at the monthly pivot level here. I don't know if I personally would have bought it here with this much weakness, but when it kind of went back up again and pulled back and didn't make the lower low, I might have went long right here, might have went long right here with a small loss. So I would have had a small win, small loss, got long again, and came right back up to a very likely reversal area. I'd probably be out of this trade here. And as you can see right now, one of our 4-hour trend reversal signals showed up on the chart. You might get 1 or 2 of these per currency per week. And typically, when they show up within 8 hours, you're going to have a day to day and a half pullback in the opposite direction. So at this point, if it goes sideways here and starts to break down, you want to short it. You want to short every wave up. So if it goes up again, it's the first fib target up there. You want to sell it. Pretty big lots. I would probably get in 2-3 lots, scale in another 2-3 lots, maybe add another 3 to 4, do a 10-15 lot position up there, because you're likely to get a 25 to 50 pip pullback. And if it can break this swing low and this swing low, it might, go down even further. You might get 100, 150 pip move out of it. So that's one currency, the dollar Swiss. Another one is the Australian. Very weak. The dollar was strong. And I'm, rather than showing a lot of examples, I want to show fewer examples today, but with a little bit more detail than you've seen in previous days. Here is the Australian dollar. You remember the Australian was weak, the dollar is strong. This currency is underneath the hourly. Part of our containment bands, which most of the time contain price, like you can see here. The dollar Swiss was so strong that it went above the upper containment band, which is just another sign of strength, really. But the Australian was weak on the currency meter. The dollar was strong. Here's an example of the same chart using our 6 pips per bar range chart. And you have a 20-day moving average right here, which is major support. Came down and found support there, support there. Support resistance areas tend to act and exist the first time the market touches them, the second time, but rarely the third time. Anytime a support level gets hit 3 times, the third time it usually goes through. So the fact that it got hit, and the market's going sideways, it double topped up here at the high, and it was extremely weak. You really just want to sell this when it breaks this little wedge pattern it has right here. And you don't know for sure it's going to break the 20-day moving average, but the fact that it hit it twice makes it more likely to break the support level. You can kind of see the exact opposite coming up later today. It hit that level here, hit it again, and it didn't quite hit it here the first time. Hit it, slightly broke through it, third time went through it. And that's typically what you will find. Support works very high percentage the first time, support resistance, I mean. The second time, if you get a double top, double bottom, very good reversal pattern. The third time, you don't want to buy or sell at support resistance. In fact, you want to buy or sell the breakout. So here we were anticipating this breaking for that exact reason. You go short. Once it broke it, the previous day's low down here is a very likely profit target. You can see extreme weakness. More than likely we would be out of this trade. And if you missed the first trade, guess what? You got another trade here. We got extreme weakness. The counter trend move had very little strength, 1/4 that amount of weakness or less. Draw your trend line underneath the bar's low, or just use our trailing stop on the range charts. Go short right here at 17, and trailing stop had you out here at 02 for 15 pip profit minus whatever your spread is in that pair. So you can see extreme weakness, another counter trend move up. Support areas, once broken, tend to become resistance, and that's exactly what happened here. Anytime you have momentum clearly to the downside, counter trend move showing no statistical strength, it's pretty much a no-brainer. I will personally myself, with my own money, if I see it come to, maybe even a pip or two above the previous day's low and start to go down, that's good enough for me because this is such a high winning percentage trade. Support, once broken, becomes resistance, and you can see that trade worked. You have the exact opposite trade again. I love it when charts show a same principle in action both on the long and short side simultaneously. So you can see when it broke above the previous day's low, it became support, and as soon as it went above that bar, you can usually buy right here at 21 and have the tiniest of tiny stops. Now, again, anytime you buy a currency underneath the hourly moving average, your odds are lower. However, if you're going to risk 6 to 10 pips, and it's likely to come up here and double top if it does go up, notice the momentum to the upside followed by the pullback had very little weakness compared to it. The momentum was showing you the odds were to the upside, and if you went long right here, a pip above this bar's high at 21 with your stop maybe at 12, you're not even risking 10 pips. Your profit target's up here at 44. It's worth taking a 10 pip risk to make 20 pips if you have a 60% odds trade. And anytime momentum is in your favor like this. Now, if the weekly and monthly trend were up, this would probably be an 80% odds trade. But the daily and weekly trend is down, but the momentum has changed. So, and the fact that it hit the low today at our regular minimum containment band and didn't even hit the 2.0, which is normally when a market's really weak, it hits the 2.0. The fact that it wasn't weak enough to hit the 2.0 band, added to this probability. The more you trade, the more patterns you see in multiple patterns occurring in succession, and certain patterns can improve your odds. So that's the Australian dollar, and I'm going to do our regular class now.